today on the Tearsheet Podcast.
I think when I look at the core slices, so not the starter kit, which is a little bit different. On the core slices, they tend to be net new assets to the firm, net new investment assets to the firm, either individual bringing them in or gifting to clients. So in that aspect, that's been positive. Different take on starter kit. It's for individuals who are just opening accounts at Schwab. So if you have an existing account at Schwab, you would buy fractional shares through slices. The starter kit, where we have some matching for first-time investors, is really geared towards that new investor to Schwab.
Welcome to the Tearsheet Podcast. I'm Tearsheet Editor-in-Chief, Zack Miller. Today's guest on the show is Zack Gipson. Zack runs Charles Schwab's Digital Investor Solutions. We talked in depth about Schwab's stock slices, the firm's fractional share product. Together with the new investor starter kit, the incumbent is reaching a new investor base, younger and earlier in their journeys. Zack shares how the product is being received and where the firm is headed in the future. Zack Gipson is my guest today on the Tearsheet Podcast.
Hi, I'm Zack Gipson. I'm responsible for Digital Investor Solutions at Charles Schwab. My purview includes all of our retail client-facing platforms and channels, as well as our rep-facing desktop. So if you're a retail client and you're interacting with Schwab through the web, through the app, our virtual assistant, chat, email, or talking to one of our great service or sales professionals, you're touching some part of my team. So I'm really excited to be on today, Zack, and look forward to our conversation.
That's great. And I think we've done over 500 episodes over the past 10 years. And I think it's the first time I've had another Zack on the show. So I'm looking forward to talking to you.
Nice. Awesome. That's a high bar. So I'll do my best.
Exactly. My mom would be proud. Let's talk about slices. I know that was one of the things that was interesting for us to talk about here. What are slices? And then I'd love to hear sort of the genesis story, like why Schwab got into this business.
Sure. So stock slices is fractional share investing, where a client can go through any of our channels and purchase a fraction of a share in $5 increments of the S&P. So kind of owning the largest companies here in the U.S. for as low as $5. And I would say that's kind of functionally what it is. I mean, when I think of it, it's really another step in our commitment to serving every investor, helping the next generation investors get started. And in many cases, if you look at those larger companies, even buying a single share would be hard. So if you look at the path of kind of eliminating commissions on stock sales, enabling, so you kind of remove the price barrier in some cases, and then reducing the amount you need to invest, it's really creating the opportunity for everyone to be an investor. So it's been exciting. In some ways, when we started, we probably hypothesized that we would attract many more kind of younger, just getting started investors, which we have, but equally so, we have many investors in their kind of early to mid 40s who've really embraced stock slices as well.
So do you have any data, like are there certain milestones that stock slices have hit so far?
Sure. When we kind of look at the big ones, we just passed $1 billion in transactions in stock slices just about a month and a half ago. Okay. Actually, probably 2 months ago. Now it's right there at the end of 2021. And so just from an asset perspective, that was a kind of a big milestone as well. And kind of concurrent with hitting that milestone, we then launched Schwab Starter Kit, which was another milestone because that's where we took really fractional share investing and wrapped a whole educational experience around it, much more robust than when we initially launched. If you looked at slices, there's education woven throughout. But when we launched Schwab Starter Kit, much more focused at that younger demographic, just getting started out. So much more of an integrated education experience as well. And I'd say that's kind of the next step of our commitment to young investors.
So with that hypothesis that you're reaching out to the younger audience, and sounds like that is inclusive in the growth that stock slices has had, do you see a lot of gifting then? Or are these parents enabling, or grandparents or friends enabling kids to get in, or younger people to get into investing?
We have. I mean, it's just shy of 20%. So it's around 17%, give or take each month, are gifting to minors with custodial accounts. I've done that with my kids. I've got young kids, and they're on the front end of earning allowance, and I'm always, I'm starting to talk about, saving, investing, and not pure spending. I haven't been as successful with every one of my kids on that front, so I appreciate it there. But each one of them has their stock slices accounts as well.
If you want Apple, invest in Apple, right? Apple products.
Exactly. Don't just buy, the phone, the iPad, the et cetera. Just invest in the company. So,
and so are these assets totally new to Schwab, or does this cannibalize a bit of some existing assets of Schwab customers that are setting up these accounts for their kids?
I think when I look at the core slices, so not the starter kit, which is a little bit different. On the core slices, they tend to be net new assets to the firm, net new investment assets to the firm, either individual bringing them in or gifting to clients. So in that aspect, that's been positive. Different take on starter kit. It's for individuals who are just opening accounts at Schwab. So if you have an existing account at Schwab, you would buy fractional shares through slices. The starter kit, where we have some matching for first-time investors, is really geared towards that, new investor to Schwab.
That's really interesting. And I guess one of the things we've reported at Tearsheet, over the past couple of years, is sort of a move towards stock picking again, which removing the Robinhood and all the game stocks sort of fanaticism to the side, but there seems to be an interest, at least, in doing and picking stocks yourself in an era of automation, which I think is kind of interesting, kind of cuts across the grain. How does Schwab see that? Because I know you guys have also definitely built out sort of automated tools as well. How does this fit in, I guess, into the greater Schwab universe?
I think at the heart of Schwab since our founding with Chuck, has been this passion around ownership of individual equities. And that's not, there's ETFs, index-based products, definitely a place for those. But that passion of really owning something, something you use every day, is just really compelling. And I think it creates maybe more of an emotional connection to investing. When you own a broad-based fund or index, you don't always know the individual company. But if you look at what people talk about, it's usually the individual company. And so I think that if I look at this, I don't know when to peg it. I feel like, but when you look at this kind of the ownership and individual investors, this marking of wanting things to reflect more of what I care about, maybe more of my values. You see that kind of the rise of ESG. It's really that emotional attachment to what you're investing in, and wanting not maybe just the monetary return, but actually to make a difference in where you choose to put your money.
I like that. And can we talk about the starter kit as well? What else is in that beyond stock slices, and what does that look like?
Sure. If you think I'll say it's kind of three elements. There's just the fractional share piece, which is slices. There's a much more kind of welcome and onboard experience that's much more tailored around kind of getting started education. And then the third one is around matching, which we currently, we put $50 in the account. You put 50 in, we put 50 in, because we want that kind of, that shared commitment to getting investors started.
And do you intend to put other, I guess, two questions, so I know that you have the S&P within stock slices. That's the universe that you can choose from. Is there an intention or a thought about expanding that universe of choices longer term? And I guess the same question towards the startup kit, essentially. Will you be including more things in that to help people get started?
Yeah, I would expect both will evolve over time. And both will evolve over time, really driven by what our clients are telling us. We've gotten feedback around wanting an expanded universe as well. So clearly we look at that among other things. But it's really interesting. The investor who's investing in slices and starter kit, although still early on that product, they're highly engaged and they're very active in giving feedback, which is awesome. As a lifelong product person, the worst thing you can do is launch a product and not hear anything from your
into the void.
Customer.
Yeah.
But these clients are very actively engaged, active in giving us feedback. So I would expect the office to continue to evolve over time.
And years ago, we had some of the early fractional brokerages on this program, and I guess, what are some of the technical challenges of building a technical brokerage platform? Fractional, sorry, I said technical, but I meant fractional. Yep.
Yeah, the fractional side, and I would plead not to be an expert on trading operations. My good friend Jeff Starr runs our operations and trading on that front. But it is when you're looking at, I think when you're looking at buying fractional shares, how that comes together, how you execute trades, how you ensure you get best execution for your clients. That adds a layer of complexity on your back office. Now, I think where a company like Schwab, we have such tremendous volume and size in trading that we're able to deliver best execution at the whole share and the fractional share level. So for us, it was probably more around the mechanics of making that happen, but in terms of ensuring that clients and get best execution, get good trade quality, all those things that any investor should get. The fractional share investor sits just on par with everybody else. And I can't speak to other firms, but I can just speak to I think our size and scale in our operations really helped us there.
Totally. And how do you let the public know about it? How are you marketing? Like, what channels are you using to let people know about stock slices?
Sure. I'll say it's a blend. So we've used kind of paid media is an avenue at launch. It rolls through our national commercials for a period of time. Over time, that becomes much more of our digital and social channels drive more of the interactions. So whether that's, through Twitter, through Facebook, wherever, we're using those channels to kind of supplement over time, which given the demographic client, those are high users of social, they're highly engaged with us through social channels. So we kind of have that balance. And, Starter Kit, I'd say is similar. We initially went out more on that kind of earned media side. We've done some paid media, and we balance that, over time.
And I want to go back to something you said, Zack, about this audience being highly engaged, and that's great for a product person, obviously. What opportunity? How are they engaging with you, and how do you continue to, I guess, to satisfy their appetite for information, for example, if they are highly engaged in sort of following the companies that they're invested in?
Sure, it's we have a blend of different ways we solicit feedback back. We have the more formal, like, user groups that we can go back and forth through by partnering with our client research folks. We get feedback through social channels, through surveys, and so we kind of get all of that feedback in. We still get letters from clients on various things. I don't know if we've gotten a letter on this particular product, so it tends to be more surveying through mobile, through web as well. I do think there's opportunity where we have more of a structured kind of interaction. I think there's really good feedback back and forth. I think the question is something I feel like I've wrestled with at every firm I've been in is, when you have the more high volume digital feedback channels, how do you kind of close that loop back with clients? I think that's an opportunity. I think for us or anyone is how you do that at scale, given the volume coming in.
And so, you mentioned that so it's about 20% of these is net new funds to Schwab. So how do people who are already interacting with Schwab, I guess, how do they know about stock slices? How are you promoting it to your internal audience?
Sure. So we do the standard kind of in web, in app. When we first launch, we do the kind of what's new treatments when you're logging in. That would present it. And then we have, I always think that the classical presentment, in web, you've kind of got your main banners on the top, or your kind of right rail banners and offers. Similar in mobile, we have different kind of treatments on that front as well. And so we try to target that based, I hate to use the term target, but it's driven by kind of relevancy for you as an investor, what your needs are as well. So.
And I guess the inverse as well. So if you see somebody come in and get very engaged, you're introducing them to other Schwab products as well, I assume, from in the same mechanism as well.
Yeah, we tend to, when you say you're in the Schwab mobile app, you definitely have full access to, I would think, the store of offers at Schwab. Same thing on Schwab.com with a bigger interface. And so the intent is if you thought about like someone starting out, a great place to start is fractional share investing. I would think fractional share investing, I think back to when I started in the industry, And the first two things I heard, was one, time not timing, time and market, not timing to market, and diversification matters. If you remember the old quilts, the market leadership quilts, where they would show asset class rotation over time. And I think it's building those muscles of the importance of owning stocks, staying invested in the market, not trying to time the market. I think it's a challenge when you're in a long-term bull market. Everything seems like a winner over time, but we know that markets are up and markets are down in the long term. It's about staying invested for the long term. So I think as you start in like a fractional share, it's really growing you as an investor over time, whether you choose to be more self-directed and buy and trade on your own in web and mobile, or you choose to have more of an advised or kind of managed relationship with Schwab, whatever the right path is for you as you kind of grow as an investor over time.
So Zach, one of the other trends that we've covered over the past couple of years is sort of what we call the rebundling of banks. So like, you had new firms on the scene, competing against Schwab, just specifically in share investing or trading or whatever. Over time, a lot of these companies expand into the same way Schwab did over the past few decades. Is there an intention for Schwab to sort of be a home for an entire person's financial life, or is it just Schwab specifically focused on just the investing piece?
I'd say our long-term history is grounded in investing in wealth management. We do have a bank. In fact, our bank is a fully digital bank. It's not a virtual one, and I think there's opportunity there. And we, as Schwab Bank, whether it's checking, whether it's deposit, whether it's kind of our pledged asset line, where you borrow against your holding. I think there's a real opportunity for us from a banking perspective. There's that natural connection of your day-to-day spend and your long-term invest, and those need to be in balance. And typically it's a spend side that's out of balance that impacts you as a long-term investor. And so I think there's a lot of opportunity there. And for us, not having kind of the weight of a heavy physical presence, I think there's a lot we can do digitally around having the bank be more kind of a bigger part of our overall value proposition for our clients.
That sounds like it would make a lot of sense, especially if you're attracting newer, younger people to the platform who maybe are in that building mode and not as much as in deployment yet. Maybe to get them and help them build that cycle, those good habits.
Yeah, it does. I tend to, I always think of like, a household, however big or small, is like a mini company. You have your statement of cash flows, you got your income statement, and then your balance sheet. And those three things all work together. And I feel like in the big financial planning world, you tend to look at all of those things in concert. But the reality is, I think in some ways, the hardest thing is a person first starting out, not making a lot of money and trying to make a decision in some cases around, not even just like spending, but just paying bills versus investing. And, how do you build those small muscles over time? And really, I think that's the role of, the importance of education in our industry. I think that's where there's a lot of opportunity is as we've made investing and trading much easier, how do we make education much more front and center? And that's a big part of what we do at Schwab, because understanding the impacts of investing, understanding the markets, and understanding how do you start investing early and make some of those tough decisions at the time really have long-term, implications. So,
yeah, I totally agree with that. And I guess one of the questions I have as we get to the end of our conversation is, we kind of went through a very tumultuous period of, meme stonks or whatever. And, Schwab has always had a voice in the market of owning, as you mentioned, owning individual stocks, but doing it responsibly. How have you sort of navigated through this time period to differentiate yourself from maybe some of those other platforms?
Sure. I think a couple of things. One, we were open for business in terms of allowing our clients to trade and transact on our platforms throughout that entire period of, I'll say frenzy. I mean, I don't know how many of our all-time record trading days were in that period of time, but wow. I think it was quite a few of the top 20 days.
I'm sure you have some stories to share. Yeah, exactly.
It was It was an interesting time, but but we were available. Clients could log in, they could trade, they could call in if they had to and trade. And I know that wasn't the case with everyone, but I think that's job number one is, especially in times of stress and duress, being there for clients and serving them is job one. And we did that throughout the entire time frame. And I think the other one is just having a sound voice around, investing in the markets. And having really a legacy built on that education and maintaining that posture throughout. So it's not about changing your posture on the markets every time the markets move. It's about staying true to kind of being an investor, investing for the longer term, understanding that volatility will happen, and how do you manage your portfolio through it.
Got it, Zack. Thanks for joining us on the Tearsheet Podcast today.
Alrighty, Zack, thank you very much. Appreciate the time and really enjoyed the conversation.